The government has moved one step ahead in the proposed public offer of the country's biggest insurer, Life Insurance Corporation of India, or LIC. Let's do a three-point analysis to find out more about this development and also how soon can we really hope for the launch of the IPO now. 1. Government selects two advisors. Well, the Government of India has picked Edelweiss Financial Services Limited and Deloitte as the two pre-initial public offer or IPO transaction advisors for the listing of LIC. These firms have been shortlisted based on their past experience in the insurance IPOs as well as their investors' reach as well and more things like that. Now, the advisors will be involved in the preparatory work ahead of the IPO. They will advise and assist the government on the timing of the minority stake sale as well as the capital structure of the institution going forward. They will also be preparing the restated consolidated financial statements for the past 3 years for LIC and its subsidiaries. Now, structuring the transaction will also be among other aspects that will be considered. The government, which has 95% stake in LIC, is yet to decide on the quantum that it seeks to sell through the IPO and the timing of the offering as well. However, the wide expectation for now is that the listing is going to happen in Q4 of FY21. 2. Why is the LIC IPO such a big deal? Well, LIC has assets under management of about 31 lakh crore rupees. There are 25 or 24 insurances in India, including LIC, which commands a market share of 69% as of FY20. It collected first year premiums of 1.8 lakh crore rupees in FY20. That was much higher than the previous year as well. Now, it has emerged as the largest institutional investor in the country with total investment of nearly 20 lakh crore rupees. Now, its total net premium is over 3 times that of the combined amount of the top 3 listed life insurers like SBI Life, ICICI Pru and HDFC Life as well. Now, the listing of LIC is expected to be the country's largest ever in terms of market cap, along with, say, Reliance Industries, TCS and HDFC Bank. Experts have also called the government's decision to monetize and allocate this resource to fresh infrastructure development and also to fill the budgetary deficit as a historic one. Now, the valuation of LIC is a challenge given the absence of any value-related data and the adequacy of provisioning as well. However, a back-of-the-envelope calculation based on its current AUM and also new business premium would suggest around 7 to 8 lakh crore rupees of valuation. So, even if the government sells, say, 10% of the stake, it could raise about 80,000 crore rupees via the IPO, which could make it the biggest IPO ever. 3. LIC IPO can add 20 crore investors. Motilal Oswal, MD and CEO of Motilal Oswal Financial Services, has written about this in Forbes India. He says that if the government gives any incentive like special discount or creates a reservation for the unit holders and even employees, it could really create higher interest and increase the retail participation in the IPO. Now, LIC has about 3 lakh employees as of FY19 and 20 crore unique policy holders, which is massive when you compare it to the around just 4 crore retail demat accounts in India.